Apple's recent second quarter earnings reveals a mixed bag of results marked by record-breaking buybacks, a significant drop in iPhone sales, and robust growth in services revenue. Despite challenges in certain product segments, the tech giant's strategic moves signal resilience and ongoing innovation in navigating evolving market dynamics. Apple announces its largest ever share repurchase program, authorizing $110 billion in buybacks, reflecting a 22% increase over the previous year. Despite the buyback, iPhone sales fell 10% year on year, contributing to a 4% overall sales decline. Though iPhone sales declined, Apple still reports fiscal second quarter earnings exceeding estimate with a revenue of $90.75 billion. Services revenue stands out as a bright spot, rising 14.2% to $23.9 billion, highlighting the strength of Apple's subscription services and ecosystem. Let's get more on this with Mike Ingram. He's an independent market strategist and joins us live now from London. Thank you for being with us on the program. So how do you interpret Apple's decision to embark on its largest ever share buyback program amidst a backdrop of declining iPhone sales?
Well, traditionally, these sort of buybacks are associated with management confidence, both in the prospects of the company and their balance sheet. And certainly, Apple's balance sheet is very, very solid indeed. It can certainly afford to put this buyback into place. However, I think, given the results that we've seen and the sort of trends which now seem to be in place, it does seem to be also something of a defensive measure. Take a step back and look at the performance of Apple's share price recently. Even after the share price rise that we saw yesterday, it's still down by about 7% year to date and 30% from its all-time high in December. So Apple hasn't really participated in this rally that we've seen by many of the Magnificent Seven. And I think the fact that, it's putting this gargantuan, this biggest share buyback ever in place, really means that the management knows that the company is actually quite vulnerable at the moment. And that is also reflected in the very weak revenue numbers that we're seeing.
So what factors do you believe contributed to the 10% drop in iPhone sales for Apple during the reported quarter? And what implications would those have for the company's future strategies?
Well, certainly there's a base effect here. I mean, the first quarter sales of iPhones last year were flattered by something like $5 billion in back sales, associated with the COVID supply problems. So it was always going to be a very, very tough hurdle to beat. However, I would say that if you look at the things like geographic breakdown, they're clearly being squeezed out of China. 10% reduction in revenues from Greater China quarter on quarter. We saw in the first quarter a 7.8% increase in global smartphone shipments. Samsung gaining the #1 top spot from Apple. So, this goes back into Apple's need to diversify into services. Obviously, the revenue growth we're seeing there is quite healthy, but the company is still in a position where over 50% of its sales are still relying on iPhone. So it needs to diversify. It wants to lock into this Apple ecosystem. It's doing that relatively successfully, but it needs incredible growth in order to offset the decline in iPhone sales that it's seeing at the moment.
All right, independent market strategist Mike Ingram, thank you so much for being with us here on TRT World.
Pleasure as always.